September 19th. It's the day after what everybody was looking forward to, rate cuts. But the big news of the morning is the news that I just got from Eric on YouTube. He said he hasn't been able to listen to my podcast for a while, but the algorithm has kept his portfolio on track with the alerts. So he started a new job. First off, congratulations, Eric. Appreciate the kind words and congratulations on the job. But again, if you want Trendspider, that's the feedback I get from a lot of people, is that here on Trendspider, you can see Trendspider on my screen. I have the cues. Yes, I draw these yellow trend lines and the support and resistance lines. Everything else on this chart, other than those two yellow lines, automatically put on there by Trendspider. So you can put the moving averages, you can put the Bollinger Bands, you can put the volume, you can slide the volume profile. With this blue line right here, you got the MACD and you got the RSI. Everything else is automatically put on there so that you can understand, okay, when should I get into QQQ? Well, the algorithm said get into QQQ at 468, where you're trading right now, 486. I've said before that 450 and 500 were your support and resistance. That remains the same. And then you can go over to VOO and take a look at it. And you can say, oh, it got me in at 512. Where are we trading right now? 523. The support line was right there at 480. You got down there at the August 5th point and bounced off. So the 50 days moving positive to 200 days moving positive. Again, these algorithms are there to try and support you. They're there so that you don't have to sit there and look at charts, that at the end of the day, you can take a look at these things and say, ooh, I'm in, or ooh, I'm out, and set your plan. So Eric, congratulations on the new job. And thank you so much for making my day by saying that. If you want Trendspider, if you want the algorithms, if you want, we'll go through everything. I'm going to go through the Fed rate cut. I'm going to go through the fear mongers, why you shouldn't be worried. The focus is on jobs. We're going to go over the biggest movers of the day. We'll go over some crypto, Mara, how it's turning into a leveraged Bitcoin fund, Alibaba and AI, and then 5 and 30 stocks. Apple's going on a run. Then we'll go over the social requests. So I've got a lot to go over. But if you want any of these tools, Linktree. The link is down below, linktr.ee/daily stock pick. Trendspider's right here on the top. If you go over to Trendspider, you get this $50 a month, $53.50, $53 to $50 a month. And again, Eric transitioned jobs. If there's not anything more stressful than changing jobs, moving, or going through a marriage or divorce, those are the three most stressful things in life. Okay, that's it. Death, obviously, life in general per se, it could be stressful. But again, that's a stressful time, and the algorithms helped him. So if you want that, go over to Linktree, click on that top link. Then you get this and you sign up. Whatever you want. If you have it in your budget, I would suggest enhanced. Standard is great, but enhanced is much better because you get to set up alerts and trading bots and active windows, everything. Okay, it's just a little more enhanced. That's why it's called enhanced. So then you go back to the Linktree and you're going to email me up here in the upper right. It's dailystockpick3@gmail.com. Email me a screenshot of your setup and you're all set. Now, the other one we're going to go over is the Quant. Okay, that is Seeking Alpha Premium. I'm going to include a combo offer with Alpha Picks in the newsletter. Okay, the Seeking Alpha Premium is fantastic. They shut me off last night. I felt naked until I got this back. The Quant is kind of my comfort zone. It rates stocks on five criteria. And we can go over here and we can look. Let's just take biggest stock in my portfolio right now is Apple. So let's take a look at the Quant. The Quant from a valuation standpoint, D. Growth, D. Profitability, A+. Momentum, B. It's a hold in the Quant. Where did it turn to a hold? It's been a hold for quite a while. They don't like this stock. Now, I love this stock. Wall Street loves the stock. $237 price target, 7% upside. Now, at 215, 212, where it got down to just a couple of days ago, I was saying, hey, long-term, you want this stock in your portfolio. You could wait for it to go down to 200. It potentially could. Yeah, T-Mobile came out, by the way, today and said, hey, iPhone 16 sales going fantastic. Okay, but that Quant is what I love. When I was looking up Unity software, because somebody in the Facebook group has posted that Unity software is beaten down, it should be bought. Well, I couldn't look at the quant, and I said, there's something about this stock that I don't like, and it's the valuation, it's the growth, specifically momentum. Momentum over 3 months, fantastic, up 28%. 6 months, it's down 20%. Okay, Unity Software, I was looking this up, I didn't like it. But that is Seeking Alpha Premium. Now, say you don't want to do any of this research. The third tool is the Alpha Picks. 2 data-driven stocks, one on first, one on the 15th. You get the full analysis when they pick it, okay? And what's great about this one is the performance, 114% versus 38% on the S&P. Those are the 3 tools that I basically sell. That's it. Yes, I have a newsletter. Newsletter is free. Okay, during the week, the newsletter is free. It's the weekend. I'm going to start recording some educational courses for paid members as well. And Substack did tell me I can start going live with paid or, subscribers. I'll start doing that stuff too. Maybe I was going to go live yesterday during the rate cut announcement, but then I was like, there's so many reporters doing this. Okay, so let's talk about the rate cuts. 50 basis points. Now, here's how I use AI. I went into AI, okay, Gemini. I said, create me a photo of a Wall Street trader standing in front of the Fed who's excited about 50 basis points. That's the picture it came up with. You should be using AI in your everyday life. That's how I used it. I just posted, shock your friends. Post it on freaking Facebook. Put it on Instagram. It's great, but put yourself in a picture. You could do that on Canva. You can do all that stuff. It's so cool. But they did go 50 basis points. Stock index futures rise sharply as investors assess Fed's supersized rate cuts. Now, the U.S. 100, the industrials up 1%. We can go and look at some of the futures. We can look at the market data. Let's go to the home here. They have the market, S&P futures up 1.56%. NASDAQ futures up 2.16%. Everything's going good. Is this the sign that we should go over? Well, let's take a look at yesterday. Okay, I want to take a look at a 5-minute chart, and I'm going to take a look at exactly what happened yesterday during the rate cut. Because this big candle right here, that's a 0.57%. Okay, that's a big move on an index like the Qs. It moved 0.57% when the announcement was made. And then what happened? As the day digested, it went down. Okay. First video course is going to be on confirmation. You can see it below that 9-day, that green line right there. That the movement of the stock price went below that. Okay. Then at 4 a.m. this morning, when markets started opening up, you gapped up. Now, a gap in pre-market is not amazing, but the gap during the market, when you get here, if you open up, right now it's 9:09, so we still have a half hour. But if you open up, yesterday you closed, let's see, it was 1600. You closed at 471. Right now you're trading at 481. If you gap up in an index, a gap will typically get filled. Okay, typically. Doesn't mean that we're not on the way up. But this doesn't mean that, oh my God, we're going to take off. Look at the market digestion initially to this. And then all of a sudden, now we're super high. The Fed funds rate will come down. Okay? The Fed funds rates will come down at 50 basis point in the reduction. The average Fed member expects about 2 more cuts this year and 4 in 2025. That will get us to a 3.4% rate, lower than it was estimated in June, which I think was 3.6. The long-term neutral rate estimate moved from 2.8 to 2.9. So they are expecting the long-term rate to get down to 2.9. We don't think we're behind on policy. We think this is timely. You can take this as our commitment to not fall behind. That's huge. So what Powell is saying, and we don't know, we won't know until the Fed minutes are released in a couple of weeks. But what Powell is saying is, we think that now's the time because the jobs market, they have 2 mandates. Inflation, which seems to be under control. It's still not down to 2%. But what they're afraid of is that the jobs market is going to not pull back a little bit. So you're at 4.2, 4.something%. Okay. They don't want that to go to 5%. Getting that back down to 4% is incredibly tough. So if the jobs market doesn't recover a little bit, then they were late. And that's what you have to worry about. That's essentially it. And the jobs market is essentially what you're going to worry about. And when we go look at the jobs market, here's today's initial jobless claims. Falls more than expected in the past week. Okay, initial jobless claims for the week ending September 14th declined by 12,000 to 219,000 from the previous week of 231,000. That means the labor market continues to be solid. Okay, that points to a bullish market. So there were two things in this Fed decision. There was, is inflation under control? With an 11-1 vote, that means yes. That most believe. It was the first dissent since like 2005. Usually it's a pretty overall kind of 12-0. But that dissent, it's not that much. She said that she doesn't believe that inflation's under control. She could turn out to be right. She could be the genius, the Nostradamus of the Fed. But again, the second one is the jobless claims. And the job market seems to be good. So when you take a look at these things, you can find two things, okay? The first is the last two times the Fed rate cut was 50 basis points, January 3rd and September 18th. January 3rd, 2001, the S&P fell 39% in the next 448 days. Unemployment rose another 2.1%. That would put unemployment above 5%. Okay, that would put it closer to 6%. Boom, recession in 2001. What did you have also in 2001? You had 9/11. September 18th, 2007, S&P fell 54% in the next 372 days. Unemployment rose another 5.3%. Recession. You had a housing crisis. September 18th, 2024, that's the next time. So my point being, you can take those last two times and point to oh my God, we're going to have a recession. The market's good. Take a bigger picture look. Okay, here's how the market has done in the past following rate cuts. These are all the rate cuts 1 year after the first rate cut. Now, it wasn't as shocking as the 0.5%, but again, look at these numbers. 1 year after the rate cut, do you see a lot of red in that right-hand column? No. You see 1981, you're down 17%. You see 2001, you were down 14%. The average, you're up 5%. I'll take 5%. You know, and in the market that we've been in, I'll take 5% because you're so far up. Okay? So, in my mind, I'm drowning out the bears. I'm taking them out of the equation. I'm saying, look, overall, the market is healthy. And so that's where I want to make my moves. That's where I want to do it. Am I going to get back in my 5%? Absolutely. Am I going to get back in today? Probably not. We talk about it all the time. Any reaction in the market is an overreaction. I'll probably wait for a little pullback. Now on the Qs, do I have a lot of pullback to go? When you look at the 4-hour on the Qs, and we're going to take out that after hours. When you look at the 4-hour algorithm on the Qs, it got you in at 468. We're trading at 482 right now. I would rather have a buy in the 470s. Now, does it matter? No. Doesn't matter. You know, between 470 and 480, if I'm looking to get into large positions, it doesn't matter. I don't have a full-time job, so I can sit and be patient because I'm still 90% invested. But I want to get that additional 5% in. I'd rather buy it closer to 470 than 480. And that's just personal preference. Just me. Just me. Doesn't mean it has to be you. But again, when the algorithm tells me 468, I'd rather buy closer to 470. Now, if I'm just going to go in with like $10,000, which is a pretty normal buy for me, I'm just going to buy at 480. Because to be honest with you, it's hundreds of dollars. It's not that big of a deal. And with the way that I hold QQQ out there, it's going to be, you know, I'm not even going to notice that couple $100 in like 5 years. So that's how I'm playing the Fed. Now let's talk about the biggest movers of the day. Okay, NEO, which I think it was D-Man asked me on YouTube yesterday. He's like, hey, I got a NEO at like 8, blah, blah, blah. It was great. Of the three EV companies that I really know in China, there's Tesla, which I think is more of an AI than a EV play. There is BYD, which I have read just owns everybody and can sell cars for like $10,000 that are fantastic. So, and then there's NEO, which has battery swapping, which costs a ton. Okay. I'm not a big fan, but they're up because they just released their new SUV in Europe. And it seems, even though there's huge tariffs for Chinese automakers in Europe, it seems like they're going full on with their growth in Europe. Might be good. I've heard the cars are good. Shares of cryptocurrency related companies surged on Thursday, mirroring Bitcoin's 3% rise. Coin was up 4%. MicroStrategy up 4.5%. There's a lot of other stuff. We're going to go over Mara as well because Mara seems to be a leveraged Bitcoin fund, and we'll go over why. But I have crypto. I have said it before. If you don't have 5% of your net worth in crypto or some type of super risky asset like that, you don't buy and sell it. As your net worth grows, you add to Bitcoin. You add to your cryptocurrency. If you're interested in cryptocurrency, buy Coinbase at least. Buy MicroStrategy because all he does is buy Bitcoin. You can buy IBIT is the ETF that I chose. You can buy Mara. You can buy Hive. You can buy Hut. You can buy Riot. You can buy CleanSpark. You can buy Cypher. You can buy all of these things. Okay, but make sure you have 5% because here's the thing. If everything goes to zero and you lose 5%, your life shouldn't change. If you lost 5%, okay, and it goes to zero, I don't think it's going to zero, but if you lost 5% of your net worth and your life actually changes, you're living your life wrong. That's just the reality of the situation, because if you're living paycheck to paycheck and 5% of your actual net worth is going to wipe you out, you're living your life wrong. So I would reorganize my life. But again, these are things that could change your life in the long term. So I want you to have 5%. And I've said this before, but that is days like today is why you want to have 5%, because this shit's up like 5-10% in a pop. Plug Power. Do not but freaking buy Plug Power. I hate this stock. Okay, soared 5% following reports of 20 megawatt order from Proton Exchange Membrane Electroanalyzer. I have no freaking idea what that is. Steelcase down 12%, and Hess diluted shareholders 3%. There's your biggest movers of the day. Now let's continue talking about crypto a little bit, because I saw this article. Mara Holdings is turning into a leveraged Bitcoin fund. I did not know this much about Mara. Okay, I'm going to include this in the newsletter. This is just a master deep dive on crypto mining and how Mara is playing crypto mining with their HODL. I think it's HODL strategy. Okay, it's interesting. This makes me want to hold freaking Mara. Let's take, and by the way, they go into Oracle and Microsoft. Let's take a look at the chart of Mara, okay? On the 4-hour algorithm, you make 50% trading this one over 24 months, okay? 32 positions. 32 positions. Your average win, 33%. It has you in at 1543. Right now you're trading at 1632 because it's up. Yesterday it closed at 1534. So you had a chance to buy this below the algorithm entry price at 1543. Now, the MACD looks pretty good. The RSI, no man's land. It's below its 200-day. You can see right here, I've said that this is the $18 to $83. That $83, are you getting back up there? I don't think so. We can go and look at this particular analyst. The analyst rating a publication, he's saying it's a sell. It's an interesting one. I did not know that much about Mara. Let's take a look at it. Okay, the valuation is a C+. They are not making money. Mind you, they are not making money. If we look at the profitability of this thing, their gross profit margin 43%. The sector 49%. But it's an A+, again, because they're making 43%. When you look at the valuation and their levered cash flow, they're not making money, so they don't have a levered cash flow. But the growth, 224% revenue year over year. The sector's growing at 3%. That's why it's a leveraged Bitcoin ETF. That's why it's a levered miner. Momentum B. Now, it's down 21% over 3 months. But 1 year, you're up 62 freaking percent. 1 year, you're up 62 freaking percent. How do you protect yourself in this? The 4-hour algorithm. Because over 2 years, over 32 positions, you make 50%. Now, if you bought this a year ago, you're up 62%. Great. But I want to protect myself from the downside. And putting these lines in there. Where did I get this line? I don't even know where I got this line. It was right here, okay? This was a previous high back here in July 2023, and it rejected off there, okay? Now, look at how it trades right around that line. Anything below this, I think you want to buy. I like Mara. I am holding Mara, I think at like $26 or so. It is less than $1,000. So the position is not huge. Sizing, don't let anybody tell you, size matters. So make sure if you're holding something that it's not a huge amount of your portfolio. If it's a loser, if it's a larger one, we'll talk about losers in the social request because there's one that a person asked me about. But Mara, I like that article. It taught me way more than I ever knew. Alibaba, over 100 open source AI models, including text to video tool. Okay. Baba is heavy into AI. Baba is the meta of China. I'm not saying that Baba is an absolute rip-roaring scream. I hate these Chinese stocks. We went over how they're Caribbean holding companies that basically China could come out and say, hey, no Chinese citizen, non-Chinese citizen should hold any ownership in a Chinese company, and boom, you're wiped out. You're wiped out. And don't put it past China. I don't put that past China. Yeah, it would kill relationships. But I don't put that past the U.S. either as making these illegal to list. And that was threatened during the Trump administration. So again, these are risky. But I like this description of what Baba's doing. Okay, I do. And when you take a look at the algorithm with Baba, and you look at this, it's a 73 up to 84. That's a good one. I would worry that this one caps out at 89. That previous high right there at 90. It is probably going to provide some resistance. Now you can see if we just put a horizontal line here at the last 90, okay? We go right there at 89.24. You can see if we even bring this back here and we bring that back at around 90, let's go to $90, okay? Look at how it traded around there, lost it. It's trying to regain it again. It's trying to regain it. Now, the 50-day hasn't moved positive. This is a weekly chart. Your RSI's at 57. Your MACD's hanging out just around the oscillator. There's nothing that tells me, oh my God, this is a bullish. Nothing that tells me this can't go lower. But I like the news on this one. I really do. And when you take a look at some of the fundamentals, the growth is the issue. And that's the issue in China. It's the growth. Earnings per share down 14% year over year. Operating cash flow down 20% year over year. Return on equity growth down 18% year over year. Working capital growth down 45% year over year. Your leveraged free cash flow, it's up 27% year over year. So that's good news. Momentum to B minus because over 3 months you're up 13%. 6 months you're up 15%. If we chart this against the S&P and we go 1 year, the S&P's killing it. 1 year on Baba, you're down 3%. Okay, then you bring it into 6 months. Gets a little more interesting because Baba's up 14%. The S&P is up 9%. You bring it in 1 month and it's about even, 0.99 versus kind of flat. You bring it in 5 days, you're about even. You can take a look at this. 3 years, Baba's lost you 44%. I would rather have you trade this. Trading you on the 4-hour algorithm on Baba makes you 24% over 24 months. Okay, 31 positions. If you just bought and held this, you're down 7%. That's where the algorithm gets you. I like it. I like it a lot. But again, Baba into AI, that's interesting. Now, let's talk about the rate cuts. Here, Steve Kress, the head of the quant team at Seeking Alpha, he goes into 5 stocks that are for the first rate cut. Okay, 5, including AAPL. Went over yesterday how AAPL, it has been just on a tear since last week. When you take a look at this app loving, still loving it. This was the article that I put in on September 10th in the newsletter, which is free. Again, September 10th, you can go back and look at it. I said this particular guy, look at how Michael has done this, okay? November 7th, he said it's a strong buy, up 201%, okay? On January 20th, he said it's a strong buy. He's up 199% since then. And then on April 8th, he reiterated strong buy. He's up 57% since then. He even bought the dip on August 2nd, and he's up 80% since August 2nd. Might I remind you, it is September 19th. He's up 80% in just over a month since he said it was a strong buy. And then on September 9th, he said, hey, it's a strong buy. He's up 42% since I put this in the newsletter. And again, Steve Kress highlights AppLovin as one of the 5 stocks with a tailwind with the rate cuts. And you can read this article. This article is great. He's got 5 stocks in here. AppLovin is one of them. And if you look at the chart of AppLovin, and we're going to take a look at some of the fundamentals of AppLovin, because this is one, the algorithm got you in here on September 12th. It wasn't even September 10th. Okay, did I get in here? No, I'm dumb. I didn't take this one. I like this stock. Did I want to buy this one up there? No, it felt uncomfortable. Now, I will tell you, if you're going to buy this, understand this November 2021 high, okay? It's at 116. You've broken through there. We're going to go to the 116 level, 116.09. Okay, that's the previous all-time high. You've broken through there. If you can hold 116, that becomes your support. Old resistance becomes new support. Let's take a look at some of the fundamentals. The valuation, crazy. Your PE, 35. Your forward PE is 27. Crazy. But your growth, again, let's look at the PEG ratio. It's 0.01. And the forward PEG is 0.82. Their growth is unbelievable. Revenue, 37%. The sector's growing at 3%. This is application software. Software was hated. There are certain names in software. Snowflake is not one that's going up. But this is a strong buy in the quant. How long has it been a strong buy in the quant? It has been a strong buy all the way since 76. You've almost doubled your money. I like the stock. I may be starting a small position in this one. I like it. It's still not crazy. To me, with that PEG ratio, it's still not crazy. The valuation is not crazy. And it's ranked number 1. Again, you're seeing how I use Seeking Alpha and Trendspider to do this, to take a look at the stock. I like it. Again, if 5 stocks isn't enough for you, UBS highlights 30 stocks in the S&P that they think have a tailwind. EQT, Energy, Albemarle, Energy, FMC, Mosaic, Franklin Resources, American Airlines, Western Digital, Southwest Airlines, Etsy, which I got rid of. I ain't getting back into. Bath & Body Works. Someone asked me about freaking candles the other day. Bath & Body Works, they think Vistra, which is Energy, VST, Dollar Tree. Does the lower end consumer come back with lower interest rates? You bet lower interest rates helps that lower end consumer. Okay, so if 5 wasn't enough, you got 30 right there. And then let's talk about my favorite stock, because I got to talk my book. T-Mobile, CEO commentary on iPhone 16 demand is positive. Okay? T-Mobile says they are selling a lot of iPhone 16 upgrades. Stock is up 2%. I mean, Apple is just one of those. It's in my portfolio. It's my mainstay in my portfolio. This is my savings account. I have not added to it here. The algorithm has you out right now, but the algorithm probably will get you in with a buy today. So when I come on air tomorrow, I'm probably going to see a buy on the morning candle here. Okay? Remember, there's 2 candles per day. And so when I scan in the morning, and we'll go over the scans, here in a bit, but when I scan in the morning, it is for yesterday's cross-ups. So today's entries will be in there tomorrow. If you want to get notified about it when it opens up, get Trendspider. You can set an alert on this. You can say, you know what? I want to set an alert. You can go down to your strategy and say, set an alert when this happens on your entry. You can say, set an alert when this happens on your exit. And what do? You get alerts. You get a text, an email. If you're a boomer, if you're over 80 and you want an email when an alert happens, you can get an email. If you just want a text because you're on your phone, what I do is I set up these alerts and then I use Webull. And if you want Webull, it's my favorite trading platform. I use Webull to go and look at the chart on the road. I love the Webull charts. Even if you're not going to, trade in Webull, download the Webull app. The charts are the best that I can see. So again, T-Mobile is saying Apple's great. Let's take a look at Apple. Am I buying Apple right now? At $225 right now, it's a little bit of a stretch. And the reason is the valuation. 33 PE, that's tough. A PEG ratio, that's at 3, almost 4 going forward. That's tough. And the reason is the growth. When you look at the growth. Now, if you believe an iPhone refresh cycle is actually happening right now, this is fairly cheap. That's the point. Because the revenue, again, this company is driven by the iPhone. And it's the hardware. While the software continues to grow and it becomes a larger portion of their revenue, the company is still driven by an iPhone refresh cycle. And I will be upgrading. Right now, I don't feel the need to rush out there and get a 16. I will be getting a 16. But right now, and it's probably from Boost Mobile, because I think Boost Mobile, you get a free year of freaking service when you buy it for the same price as you would buy it at Apple or Best Buy or any other retailer, but they give you a free year of 5G service. Why wouldn't I just open up a new line out there and get a free year of service? Unlimited service on their 5G plan. I can get a free line. So if my phone doesn't work on one, I can just change the eSIM over to Boost Mobile. Maybe that's a little bit more technical than you are, but again, the point is I am going to get an iPhone, and I like the profitability here. A+. Look at their margins at 45%. Yes, the sector's at 49%. Big deal. The return on common equity, 160%. Information technology is ranked 5 out of 60. Seagate's number 1. Dell, I have a position in Dell. I like Dell. Western Digital Corporation, Fujifilm. I have no idea what these guys do with Apple, have to do with Apple, but you can look at the peers here. You can see Dell, HPQ, SMCI. How Apple's associated with SMCI, I don't know. But you can take a look at that. I like Apple, and I like it a lot. Okay? Now let's talk about some social requests. Okay? This is Cade from email, and this is a good one. It's pretty relevant. Before I began listening to your podcast and learning more about stocks, I made a novice move where I purchased 15 shares of Micron in April 2024 for an average price of $122. Since then, I'm roughly down $558. It's been bringing my portfolio down. I agree with you when you say cut your losers because, like you said, if I'm down 50% on a stock, I'll take a 100% gain to break even. However, it's in my brokerage account, not my Roth IRA. Would it be wise to sell the stock now and use it to offset my gains for the upcoming tax season, or continue holding it until it's considered long-term before selling? Not really sure if that'd make a difference, though, since I'm already at a loss. I probably should have sold it sooner, but I was hoping Micron would bounce back a little bit more before selling. Looking back, I regret being impulsive and purchasing that many shares without really analyzing the stock. But I really think now I've learned from my mistake. I would greatly appreciate your feedback. So, perfect. And Kate, first off, don't feel bad. I make this mistake all the time. The problem, the mistake that you made was going in too big at first, okay? If you bought back in April and it was right here, then you started seeing it pulled back. You bought, let's see, it says April 2024. So you bought at 122. I'm assuming it was during this downslide right here. And then you saw it come back, okay? And it got to 150. And then you started to see the slide. The learning I would take from this is if it's in a brokerage account, remember, long-term losses can be written against long-term gains. Short-term losses can be written against short-term gains. So if you have short-term gains, when you're down at this level, it's hard. It's hard because more than likely, this one comes back. I can't imagine that this one doesn't come back. But when you take a look at this, they are not making money. And so the valuation is tough. They're expected to make money, but they're expected to make money to the point where their PE forward is 71. That's expensive. You know, you can take a look at the Wall Street estimate, 35 analysts. They've got $151 price target on this. But you can see they chased this one up. They completely chased this one up. Now, if I were looking at this one and I were saying, hey, do I want to buy this? It just went to a strong buy in the quant. The quant is saying, hey, this is fairly valued. I don't think it's fairly valued. The PEG rate, the PE going forward, 124. I mean, that's huge. They don't have a PEG ratio because they're just not making money. When you look at their growth, 17% revenue year over year, so they're doing good. But when you look at the free cash flow, it's not going well. And so they're just not managing their cash well. And that's the point of this, is that they're not managing but everybody's saying it's undervalued. I would tend to agree with them. The problem you're going to have is, when do you cut your losses? So if you take a look at a weekly chart on this and we say, okay, I want to find out where I want to sell this. If you break 77, you're already down 50%. The move from 88 to 77, yes, it would hurt. But I would not sell into this weakness. Okay, not with a company like Micron, which is actually pretty good. They just have some type of cost problem. And that's the main issue, is I think with Micron here, that 97 I thought would hold up as support. And that was because look at how back here in March, how it double topped in March and December. It double topped out there. And so I thought that would provide support. Here's what my play would be. Because I don't want you selling into weakness. They have earnings coming up September 23rd. It could be bad. I can't imagine it's worse than it is now. I can't imagine that it's worse than it is now. I think you see it use that 97 as, again, a top. Okay? So the difference between 88 and 97, you have to ask yourself, do I want to hold on and sell it at 97 rather than 88? Or do I want to just sell it now, get rid of it, forget about it, write off those losses, sell another stock for a gain since it's short term? I always suggest people hold on for the long term. When we take a look at a monthly on this one, you can see Micron is just getting back to where it was in 2000. That's where that 97 really came in, the 88 kind of 97. That's where it came in. The fair market value is about 83. So it's not crazy to go and sell this one and just kind of cut it as a loss. Does it have 70 in it? Absolutely. Look at that monthly chart. It could go down to the 70s. I'm not saying that it can't. I just don't think that a semiconductor business in an AI market deserves to be thrown away when it's got weakness. But again, here on the monthly, your MACD is still high. So if it were me, I'd cut my losses. But I try not to cut my losses into weakness. And you are seeing weakness right now in the weekly. And it's hard because I do think that you have an opportunity to get, the Bollinger Bands are just so tight. And you've got the upside on the confirmation. I'd say as you pull towards that 97, that's when you want to make your determination. If you see it pull back, right now you're trading at 89.20. I think if you see it get to 92, you start trimming, okay? Start taking one share off. And then sell another share, and then sell another share until you get back up to 100. And I think you should be out then and find another stock that makes sense. Find NVIDIA, find SMCI, find one of those companies that's actually making money in the semiconductor business. So, Cade, my apologies that you lost. We all have it. And yes, it hurts losing $582 out of a smaller account. It's just not something you want to do. But we've all been there. And you held on through this downturn. Let this be a lesson that, again, the 4-hour algorithm on this one makes you 72% versus 57% if you just held on for 2 years. And if you held on for 2 years, you're still doing fine because you're up 57%. But the algorithm and finding a system that has a chart basis that takes emotion and it just uses the chart. It just uses moving averages and the RSI. It just uses that kind of stuff on the screen to tell you I should be out. And that would have been nice because, you could have gotten out with a nice 20% gain. But we've all been there. We've all been there where we just, hey, it's still in an upward trajectory on that 50-day. It's still moving up. It's got to come back. No. If it's not making money, you don't hope and pray. You've got to identify A, if it's long-term before you buy it. B, whether it's a trade, because if it's trade, you get out and you set your stop losses. So, Kate, I think it's just, again, it's just a learning experience, but I would get into a company that's actually making money. Take your losses. If you have gains against it, great. I think it's 3 years. Go and look up, short-term losses, write-offs on stocks and stuff like that, what you can do. Now, let's talk about our scans, because every morning I scan the internet with my 4-hour algorithm based on this. Boeing. Let's talk about Boeing. It's got to come out of the core portfolio. It's got to. They did get 50 orders from China. That lifted it by 0.72. In a normal sense, this would be a $200 stock if you ordered 50 freaking 737s. The strike, the management, it's just bad. I do like the fact that they put an engineer in charge and the future CEO. I do like him. I do have hope, but I think it's got to come out of the core portfolio until it gets turned around. Again, 176, it ripped right through there. The next support level is about 120. Do I think if this gets down to below 150, I think you got to load up on it. The revenues are just too good on this one. But again, they just keep shooting themselves in the foot. Look at the growth. Look at the profitability. Look at the momentum. Look at the revisions. They keep shooting themselves in the foot. There are 28 analysts that cover this. They still have the price target at 217. 217. But they've chased this down, and I think they're going to chase it down. But it did get a cross-up on the algorithm and an entry in the algorithm today. If you want to buy this one, you make 45% over 24 months, 29 positions. 45% versus 2% if you just bought and held it. So it's an interesting one. I don't know that I want to take it. I want to get this one out of the core portfolio. It's just been one of the losers in there. BRK.B. And remember, the core portfolio is not a managed portfolio. So it's not something where I cut my losers and add to my winners. It is just, and if you want to see it, it's on Savvy Trader. You can go over here to Linktree and you can, Savvy Trader, follow my trades. And it's down here at the, on the core portfolio. You compare it against the SPY, which is the index that's up the most year to date. Okay, the core portfolio is up 30%, but it's just 100 shares of each company. And when you go and you look at Boeing, where is Boeing? Let's see. Let's sort it by the symbol. Where's Boeing? There it is. It's down 26% since I bought it. When did I buy it? Initial holding, June 20th, 2023. So it's just been over a year. But it's down 25%. There's no reason to hold on to that. Again, this is a company that you don't want in your portfolio, but it is in the core portfolio because it's a good company. But it's just not managed. It's a good company with good products. The profits aren't there. The management, not there. So I probably should get rid of it. It came up. Now, what's a good company with good stock, with good products and good management? Berkshire. Berkshire has an entry at 456. Yes, I bought it at the all-time high on Buffett's birthday. I bought one share. Probably buy more here. I only own that one share. I like this one. Look at the MACD resetting. RSI down at 441. If there is one that is going to benefit from an even stronger consumer, it's Berkshire. I like this one. This is like an ETF. Now you're trading at the top of the Bollinger Bands. The MACD super high. The RSI, but this is one you just add to. Financials, JP Morgan is one of the Dow stocks. This got a cross up 209, 209.17. MACD super low. They have their earnings coming up. We're heading into earnings season in October. October 10th starts with all the financials. So, again, this is the best of breed bank. A healthy consumer, that does well for JP Morgan. So JP Morgan's one. Moderna. We're heading into, the vaccine season. This one's interesting. It's still not a great company. I don't like it, but it's interesting to trade. You got a gap up here all the way up to 119. It's interesting. USB, I think it's UBS. Let me see. Does UBS? I think it might be UBS. UBS, no. USB. Oh, US Bank. Okay. It is USB. 45.13. We talked about this one a lot. This one makes you 9% in the algorithm. You lose 3% if you just bought and held. Now, energy. I have Bitcoin and crypto. There's only one, BETE. Venom. It's Viper Energy. This is one at 45. The algorithm makes you 24%. You make 45% if you buy and hold. What's interesting about this one is this one I was looking at when I bought MPLX back in 2020 when the energy sector was beaten down and MPLX was around $8 a share. It was between this one and MPLX. Now this one, the dividend is 5.98. The reason I took MPLX over this one was because the dividend was bigger. And if we just look at this one, let's look at VNOM, and then I'm going to chart it against select symbols, and we're going to go MPLX. Let's see if I made the right choice in this one. You know what? We'll include VOO. Because let's see exactly if they both outperform VOO. Select metrics. We're going to go to total return because we want to include the dividend. Okay. 1 year, Venom is up 70%. MPLX only up 37%. God, that's great. 3 years, Venom up 177%. MPLX up 110%. 110%. VOO is up 37%. So both of them outbeat. Now, you look at this one, 5 years. We're going back to 2020, so it's like 3.5 years. But MPLX beats Venom and it beats VOO. So it's interesting. Venom is just one of those energy names that you could trade with a nice dividend on top of it. We have TSLQ, TSLS, and TSDD on the leveraged ETFs on the scans. So again, I don't think that the rate cuts are the end all. And it's not, oh my God, we've got to go. It's a bull market. You're in the first inning of a 9-inning, potentially extra innings game. Jobs market looks good. Everything looks fine. But again, when you look at seasonality and we go to QQQ, any reaction in this market might be an overreaction. Because for the last 17 years, you start going really well over the coming weeks. So I would start adding Qs this week. Now, when we go to VOO, it's a little bit of a different story. Because this next week, you're down 29%, only 29% over the last 14 years. Okay, let's take a look at SPY. SPY and VOO, by the way, are the same exact thing. I just like VOO because it's got a little bit less of a fee, but it's the same thing. You can see down 29% of the time. Your average, your mean change down 1.1% on the week. So in my mind, tomorrow's Friday. I'm waiting till Monday. I'm going to start getting in on a down week. We might see some down. You had pagers and walkie-talkies explode in the Middle East. What's going to happen over the weekend? So I like this stuff. I like this a lot. I like this market. I think we're heading into a good time. I think it's a good time to start adding to stuff. Pick your winners. The market just looks good. I mean, Coke is down 0.33. On a day like today, Coke is down. And the reason is, look, it's at all-time highs. Your all-time high here was 73.53. You're at 71. Again, you're going to come down to this 50-day at 70. You're going to have a chance to buy it at 70. Meta, I think you buy it under 500. You're at $540. This thing's been flying. Netflix, I said it yesterday when it was at 705. You'd had a chance to buy it under 700. It's at 698. Okay, Nvidia, you're at 117. I think this one trades between 110 and 120. So you've got opportunities out there. There are a ton of opportunities. Don't hold on to your winners. Don't hold on to your losers. Hold on to your winners. Start adding to your winners. Apple is up 2.76% today. Just on news that the T-Mobile saying, hey, they're flying off the shelves. The iPhone, again, I think there's opportunity. Cleveland Cliffs up 3%. This is one I've hated to hold on to in the core portfolio through this time. But you take a look at this weekly, and it's shown that through 2020, it was a great one. We've broken down outside of this. This is one that I might want to get rid of and might want to add a spider sector into the core portfolio. Maybe XLB into materials. So there's opportunities out there. Thanks for listening. I appreciate everybody for listening. If you have any questions, hit me up. Okay,
every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.